Hey guys, this is a video to follow up from the article that we made that was called Patterns Repeat. And it's important to understand the pattern that could repeat itself. But with trading, it's really the next question is always really the more important question. So it's kind of like, it's the question is where the market going? It's going up. It's really the next question of it's going up into when or to where, right? That's the more important question because like today the market's going up. You can see that. Really, it's the second question that's more important, but to where? And that's the same thing with the patterns. And there's multiple levels of this, but just for this video, I'll keep it kind of simple. But it's really understanding at once one pattern is complete, what to look for to flow into the next pattern. Okay, so and there's different time frames. So it when you're looking at, like, let's say a 3 minute and it's going up into, okay, a bigger resistance of pattern, not so much just price right here. That's obvious, right? And obvious doesn't really work in the markets because why is this high relevance for resistance and not this high, right? Maybe they all have a little bit of value, but it's not really a value that's a tradable event. If you do that, you're trading counter trend. Um, and obvious really just doesn't work. Okay, so what we really try to focus on is what to look for to flow into the next pattern, or what to look for during the pattern to give you odds if the pattern is going to complete. That's the second question. Like we're in this pattern. Okay, second question, what do I look for to tell me if this pattern is still true or if it's false? Because if it's false, then it's going to fail. So at this point, um, there is a bigger pattern resistance right here. Okay, so if that pattern plays out, we would take out this low. But there's things that happen way before that scenario is there to where we're back at this low. And it's the things that that happen in the middle that's the more important part of the whole sequence because that's what you're trading. Unless you're just holding for bigger trades. But most people aren't. They're trading in and out of it multiple times during the day. So let's say if you take more than 2 trades a day, you really need to understand this, okay? If as far as breaking it down into the smaller view, if you just trade 1 or 2 times and you can hold through all of these minor things, it doesn't really matter as much, right? Just like swing trading is much easier than day trading. And why is that? Because you just have to really look at a weekly and a daily and get in with the trend. But when you're day trading, there's more time frames, there's more confusion, right? And there's more decision levels, and there's more decisions we have to make. Especially if you're a day trader where a little move like this scares you or that stops you out, you're really trading the minor variables on a small chart. So it's even harder. And that's where a lot of traders, they default right to scalping at the beginning of their career because, you're looking at the risk. I don't want to risk that much. But in doing that, your profit potential is really low as well. And there's a vicious cycle that most traders can't get out of, and the end result is negative. So it's really understanding the method that's right for you, but understanding inside of that method where the turning points are, where even if you're long, if it comes down a little bit, you're still okay with it. If you're in the thought or the mindset of I never want to take heat on a trade, that's the wrong mindset because it's not the reality of it. So I always tell people maybe trade something that's less money per point and actually give the trade room to work so you can develop good habits. Okay, so what we're looking at is potentially we're at a bigger resistance here. And potentially we could break this low. That would be our multiple day outlook. But we never just have one outlook. There's always two, and it's understanding during during the day, which one of those is really in play, and you're asking yourself questions to say which one is true and which one is false at this moment. So you're trading the right one, because there can be a move up in a downtrend. So at this point, the next decision level is here, right, to this wave up. But that's obvious. The real turn of the pattern is over here. Okay, so, and that's why we don't want to try to pick tops. It's pointless really to try to pick the top, because even if you were right on this exact bar, let's say, and it went down, it's not going to go down from here straight down to here where, it's just a really good trade, because that's counter trend. Okay, because there's always going to be minor waves within it. So if you're trying to really pick the top, you're going to have to sit through this whole decision pattern. Okay, when one pattern is complete and it's in the process of going into the next one, the next pattern, there's a decision going on. And in our opinion, most traders are trading that decision level, which is higher risk. Okay, so, and remember, if, let's say this trend is up and then it reverses, it's always a bullish pattern that fails to start the new trend to the downside. It's not off just one bar. It's a pattern that fails. And that's more over here. Okay, so, and we go over this in the course in great detail. So as it's going, you understand, which levels to look for. So an example of that is here. Same exact thing. Here's the high, okay, just like potential here. It's not off of this high where it turned. It's here it turned. Okay, to complete here. Same thing. So if we look, it's here, here, then here. Same thing. Here, here, then potentially here. But it's gaining odds on this leg and this leg. Each leg you're looking back to gain odds on it. Okay, because any trade, if you enter down to here, it's counter trend to this 3-minute chart, which is a small chart. So you don't want to trade counter trend on a small chart. We trade counter trend only on the 60-minute chart because there's enough time and price to do that, because the move might be for multiple days. So if you're trying to catch a top, okay, you're gonna have to sit through this. This whole thing right here is a decision, and you'll see how it's choppy, and you'll see how this decision zone lasted, a day and a half or a full day. So if you understand you are in that decision zone, you can slow down and not over trade it, because it's higher risk because we're at a decision. And this is where you're not just looking at one thing. It's always, is there odds on this high or is there not? If there's odds on it, then this has a higher potential of turning it. If there's not odds on this high, this low has higher odds of breaking this high and higher prices. So it's never just looking at one scenario and trying to repeat it, because the odds over here are going to be different in different situations. And then here's an example of the minor. These are just, we call them minor variables. It's the pattern is here to here. If you know that, then you only want to enter in that direction until pattern's complete. So you're not trying to pick these bottoms as buy levels. In uptrends, there can be moves to the downside and it's still bullish. And that's where it can get confusing if you don't know what to look for. So, and you can see off of this pattern completion here, the result was a contraction. It's the small time frame is trying to make up its mind which time frame is going to kick in. The bigger from here to here, very unlikely. The small time frame has to complete and then have smaller patterns that turn into bigger patterns. Even though they're down patterns, they're still bullish. So this is just something to kind of slow down your thought process into understanding before the bars are even here what to look for. So when you are here, you understand what's going on. So hopefully this video helps. See you guys in the next video.